My name is Julie Saltman. I'm a CPA and Director and Owner of Reed Madison, a Brisbane-based financial management, taxation and accounting practice. Today I want to look at tax planning for small business entities. Basic rules: small business entities are a business with a turnover less than $2 million. However, check with your accountant. There are some other bits of that rule that could change that slightly, so just confirm that. My view is tax is just another cost of doing business, so wasting $1 to save 30 cents does not make sense. We want to make sure also that what you do doesn't cause a cash flow problem. So there is a place for tax planning and saving tax, but not at the expense of other things. The reality is, with tax now, there's no great last minute 30 June quick fixes. So there's still some things you can do though, because what this is more about is not messing up your cash flow for any great length of time, and not just going into ridiculous investments that aren't part of a sensible long-term strategy. So things you could be doing is bringing expenses forward. So pay for things before 30 June that you were going to buy in July or August anyway. So things like consumables, seminars you might be wanting to go to, trips you might be planning, subscriptions that might be due in the next month, or small assets under the $1,000 limit such as printers, mobiles, office furniture. Pay your Yellow Pages advertising in full up front. So all you're doing is bringing those expenses forward. You are going to incur them. Don't create new ones. You don't want to waste your money, but if you're going to have to pay for things, now would be a good time. The other thing small business entities that can do that larger business can't is to make prepayments, paying things that are going to be used up over the next 12 months. So it might be things like paying rent in advance, paying software licenses in advance. It's also possible to prepay interest on loans. However, that needs to be arranged with the bank, and it may be cutting it a bit fine, but if you think that's an option for you, go and have a talk to your bank and see if that's even possible this time, or definitely maybe have a look at it for next year. You also would like to get all your superannuation paid before 30 June. The superannuation guarantee quarterly instalment isn't due to the end of July, but if you want the tax deduction, get it into the super fund before 30 June, not just left your office, into the super fund before then. Or if you are making additional contributions, get them in before 30 June. Same thing, just consider your super. You either can contribute $25,000 or $50,000 depending on your age, less what maybe if you've got SG contributions already. But just consider your cash flow in doing that. The tax deduction's great, and it's great to have money in super, but cash flow maybe have been better to hang on your cash. Hey, you could give your staff, or yourself if you're an employee, a one-off end of financial year store gift voucher, a gift basket, or really any gift that's $299 or less. I didn't make the rules, the tax office made the rules, so $299 or less, not $300 or less. So you get happy people, a tax deduction and no FBT, because it's going to be potentially considered a minor and infrequent benefit. But there's some very strange rules in relation to fringe benefits tax. You might want to check out that with your accountant. And I think that's the basic rule for all of this. This is general advice. You might want to go and talk to your accountant about your specific circumstances, because you've possibly already got more tax deductions than you know, because you potentially may have bought assets that were eligible for the tax break. So while you might think you have a profit, if you haven't been talking to your accountant, it may not be as big an issue as you think. So get it checked out. Goodbye.